Welcome back. So markets across Asia are pretty much red. Japan's down about 0.7%. Shanghai is down about 0.25%. The Hong Kong market is the only one that's a little up in the green. So we're expecting a cautious start for us here as well. But what about individual stocks? We have a team standing by with the CNBC-TV18 list of top stocks to watch. Let's kick it off with Manappuram. Abhishek, finally some good news coming in for Asirvad MFI.
Well, all the four NBFCs wherein the restrictions by RBI was placed on 17th of October 2024 has now been lifted. So, RBI has lifted the supervisory restrictions that they had placed on Asirvad Microfinance and DMI Finance. So, Asirvad Microfinance is an NBFC, is a subsidiary of Manappuram Finance, who holds about 98% in the company. And with this restrictions being lifted, it would act as positive catalyst for Manappuram. Back to you.
Absolutely, and I think important to take on board this news flow, especially with regards to implications for the company, listed entity. Now, Lupin should be in focus, and so should be Borosil. Vivek is standing by with details. Vivek, morning.
Well, good morning. Positive news flow coming in as far as Lupin is concerned. Now, this is regarding the Pithampur unit, an important facility for the company. So, after the inspection that was carried out in September, remember the company had received 6 observations, 3 observations each on the API as well as the finished product side. So, the company was awaiting the classification from the US FDA. So, the company has now received an EIR, which is an establishment inspection report, and the kind of classification that they have received is a voluntary action indicated, which indicates that the majority of the issues that the site had have now been resolved. So, it's a positive development as far as Lupin is concerned. Now, coming to Borosil Renewables, the long-awaited capacity addition that the company had put on hold or had deferred is now back on track. The company has announced a large expansion of close to 50%. This is in the manufacturing of solar glass. So, the manufacturing capacity of the company will now increase from 1,000 tons per day to 1,500 tons a day. And the main reason that the company has now found the confidence to go ahead and increase the capacity is the minimum support price that the government has introduced as far as import is concerned. Interesting development. Expect some green on both of these stocks today.
Okay, thanks a lot for that, Vivek. Well, let's hop across to Hormuz. He's here to tell us about Tata Motors. Hormuz?
Nigel, morning. And Tata Motors, the JLR retail sales numbers is what it will be reacting to. The retail numbers were down around about 3% for the quarter, 1.06 lakhs unit, but the improvement came in the wholesales, and that improved by 3% to 1.04 lakh units. And these, the wholesale volumes improvement reflects the fact that there has been some turnaround after the supply disruptions that were seen in the second quarter. Mind you, Tata Motors as a stock has already corrected by a third from its record highs, so expect the stock to open in the green post this.
All right, so Tata Motors is going to be on our radar as well. Thanks very much, Hormuz, for that. Let's go back to Abhishek. Abhishek, so you were alerting us about this meeting, DFS meeting with a lot of MFI and fintech players. What's the latest?
Well, we also alerted that there may not be a major outcome with respect to what the industry has been demanding with the, defense secretary, and that's exactly been the case. So the DFS SECI meeting outcome for the MFI lenders is that MFI should draw a roadmap with respect to strengthening the sector and become more viable. MFI should encourage a repayment of loans digitally, and MFI should focus on cyber security and resilient IT infrastructure. Now, MFI should also strengthen the governance strength, standards. So over leveraging should come down is what is indirectly meant by, governance standards, and indirectly that's being meant by them. So there's not much relief with respect to asset quality or funding, funding that's been asked by the lenders to the secretary. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, I'm looking at 2 stocks in the metals pack. One is Hindalco and the other one is NMDC. And both of them could start off in the red. They'd start off in the red. We'll see what goes on from there. For Hindalco, Novelis has released their provisional numbers for the past quarter, and the numbers look quite weak because you have the adjusted EBITDA that's coming at around $360 to $370 million. The volumes at around 900,000 to 910,000 odd, which tells you that the calculated EBITDA per ton will be around $400 to around $407 per ton. Now, these provisional numbers look weak. The reasons that they've given is we know that scrap prices have been moving up, and because scrap prices have been moving up, spreads will get compressed. So that's point number one. The second factor is the product mix. Lower amount of auto sales, that's what's going to hurt them as well. So both these 2 factors will weigh on them. But however, the stock, after starting off in the red, I expect there could be some kind of bottom fishing. Why is that? Because the stock has corrected 24% in the last 3 months. That's post their Q2 Novelis numbers when they said that they're suspending their guidance. So that's when the street got a little bit jittery. So the stock has already corrected 24%. And the management is saying come Q4, it could look like Q2, which effectively means it could be in that range of around $480 per ton. That will compare with around $400 per ton. So because of both these 2 points, I'm expecting out of the stock to start off in the red, to see some kind of bottom fishing and close maybe closer towards the green line. So that's the first stock. The second one is NMDC. You know, a few days ago, we had told you about the operational update, which looked very, very weak. And I had mentioned at that point of time as well, because of this weak operational performance with regard to the offtake, there's a possibility they go ahead and cut prices. And effective today, they've gone ahead and cut prices by 350 rupees, both on lumps as well as on fines. And the street really had sniffed this post that weak showing. So why have they cut prices? One is because global prices have corrected by close to 8 to 10%. Second factor is because the operational performance was so weak. For December itself, the sales offtake number was down by close to around 7%. So that as well starts off in the red. Maybe we'll see some kind of recovery because the street was anticipating a price cut and maybe 350 rupees per ton is par for the course.
Okay, all right. That's NMDC. We're going to watch out for this one and, of course, the impact on Hindalco as well. But let's talk about the jewelers. Most of them have come out with glittering updates for the third quarter. What about PN Gadgil? Mangala, morning.
Well, no different from the glittering updates that we've got everywhere else as well. But if you just look at it at a percentage basis, maybe, you know, it may not be as big as, say, something like Kalyan Jewellers or maybe Titan on that base as well on a consolidated basis. But they have been growing slow and steady itself. 24% revenue growth is what the company has reported on a consolidated basis. The good part is retail revenue has actually grown 42%. And unlike other jewelers who are seeing gold see further traction, PN Gadgil, because of the low studded ratio, has actually seen diamond sales grow by 40% as well. Remember, they had a plan of opening 12 stores in this financial year. They've opened 9 in this year so far already, with 3 more in the fourth quarter. So see some green on PN Gadgil. But remember, jewelry stocks have been abuzz ever since the start of the third quarter on hopes of strong performance coming in on account of the festive and wedding season as well. And this one, no different.
All right. Mangalam, thank you very much for that. More stocks with news flow. Hormuz is standing by with that list. Hormuz, morning.
A couple of stocks on our radar, Prashant. Morning to you as well. Zen Technologies is one of them, and they've been granted an Indian patent for a T-72 containerized crew gunnery stimulation system, and this is their 11th patent that they have received in FY25. And this is also an advanced training platform that is designed to enhance the gunnery skills of the T-72 tank and the other gun equipment systems. So positive news coming in there for Zen Technologies. May open in the green, but may also be in the price as well, because the stock over the last 12 months has already tripled in value. It's up over 220%. So keep Zen Technologies on your radar. And the other one is Anand Rathi Wealth. They made an announcement yesterday evening that they are going to hold a board meeting on the 13th. They'll consider a bonus issue along with their third quarter results as well. The first issue of bonus shares after their listing, which was in December of 2021. And the stock here as well, it's been an outperformer in line with most of the other capital market linked names, up 7x from its IPO price of 550 and in almost a 3-year time span. So expect Anand Rathi Wealth to open in the green as well.
All right, got that. Thanks very much, Hormuz, for the details there. So let's quickly recap the list that we have for you today. The stocks that have positive news flow around them are Manappuram Finance, Lupin, Borosil Renewables, Tata Motors, PN Gadgil, Zentech and Anand Rathi Wealth. The ones that could maybe open out in the red, Credit Access Grameen, Hindalco and NMDC. Okay, so that's the stock list for the morning. What about commodities? We've got Manisha standing by with a roundup of all the overnight action. Manisha, good morning. So what's new? What's the latest?
Well, thank you for that, Sylvia. I'll start with the crude oil prices, where we did see 77.5 in terms of Brent prices yesterday, but the prices have come off those 3-month highs, and we are trading below $77 a barrel as of now. Well, the strength in U.S. dollar index seems to be weighing, and so is the thing that the U.S. crude inventories have seen a decline for a 7th straight week. The markets also seem to be reacting to, in some sense, to the U.S. FOMC minutes that came in yesterday, where the U.S. officials emphasize on cautious approach. The future rate cuts, they say, will hinge on clear economic indicators. So that's a bit of an uncertainty, and that has led to a decline in crude oil prices. Gold also saw some decline. Silver seems to be holding firm. But the best of the gains within the metal as a sector has come in from copper prices, 3-week highs, 2% of gains in the overnight market. And this is a space that is expected to, or rather, copper is expected to lead the metal prices in 2025, is the report that's coming in from various banks and brokerages.
All right, Manisha, thank you very much for that. So commodities in a bit of focus. Of course, I mean, the big rise in the dollar that we've seen last night perhaps also takes a bite out of any expectation that stocks there will see rallies. The dollar index just under 109 levels. We'll take a break. We are back. Deepan Mehta, Elixir Equities, will be joining in with some fundamental stock conversation. Stay tuned.